Welcome. I think I can possibly say that this particular slide will likely bring us very closer to what the nitty-gritty of what this particular course is all about. So in this segment, we'll be looking at an analysis of investment decisions in agribusiness. So while we run with this particular segment, at the end of this section, we expect that each and every one of us should be able to explain the concept of investment decisions, then identify factors that influence investment decisions, and discuss the factors relating to external funding. So let's move on now as we look at the definition of the concept of investment decision. What we want to do here is to attempt a general discourse on investment decisions. Because when we look at investment decisions, of course, we know they are meant to bring more efficiency in business. But then, even though they are bringing more efficiency, we also agree that it's a complex situation, especially in agriculture, both for the farmers and for the investors and for the banks. So the farmer will need to take investment decisions as to how much fund do I need and where do I put in this fund. The investor who is interested in partnering with the farmer would want to say, how much fund am I giving out to this farmer? And then where do I advise this farmer to put in these funds? And then is it likely that I will have my return on investment at the end of the whole show? Same apply to the banks. So the complexity of the process is also determined by several factors that influence investment decisions. First, in the decision-taking process, usually agribusiness managers and investors consider the expenditure over a period. It might be a long-term expenditure assessment. It could be medium-term expenditure assessment or short-term expenditure assessment. But then what we are doing is that expenditure must be considered over a given period. Then the cost of the capital must be focused on, and then the expected profitability. Recall that we are in business to make profit. We are in business to make profit. So from what we're going to discuss here, you will agree that there are several factors that the determinants of investment decisions include increasing incomes provided by the investment. It will affect investment decision, the market size, possible constraints, personal characteristics. There are certain farmer-related personal characteristics such as farmers' level of education, farmers' age, farmers' perception of risk, farmers' access to agricultural credit and loans. So there are personal characteristics that will usually determine investment decisions. And then the farm specific factors. There's farm specific factors like farm size, farm location, and then various variables that will influence investment decisions. But what we're saying in general is that cash flow proves to be important for a bank's decision in financing its project when essential indicators like liquidity rates are not adequate in the analyzed case. So let's now move on with this study as we look at the aspect which concerns factors relating to external financing. Agriculture is a significant economic sector, not only for its contribution to the GDP, GDP here means the gross domestic product of Nigeria as a country. But then also agriculture is playing a very active role in the food and raw material provision, along with income and employment for the rural people. The use of limited resources make agriculture stand for the constant need of investment. Investments that are necessary because they will support agricultural productivity and sustainability. But then, however, investment in general in agribusiness should expectedly increase the efficiency and performance of a business, while the decision should be supported by cost management and capital budgeting, using the available data that needs to be put into relevant information. So I gave you an assignment earlier on to assess if proper information provided by the managerial accounting can help farmers in their investment decisions, considering both their own funds and borrowed capital. And then I also asked you to check if information provided by managerial accounting will help strengthen the creditworthiness of agribusiness in Nigeria. I expect that everyone should be able to discuss those assignments effectively, so that anywhere at any point when you are called upon to present or to discuss them, it wouldn't be an issue that will give you a burden. You can just do that very fast without having to consult external materials. All right. On the factors relating to external financing, these factors that relate to external financing will include the inherent risk, that's environmental risk that refer to the impact of weather, fluctuating prices, or animal and plant diseases, which can impact the cash flow incomes. We are currently in a dispensation where we are discussing climate change, and here climate change comes into the picture. The inherent environmental risk issues is an important factor which will influence the way that investments are carried out. And another factor is the nature of the need of funds. The nature of the need of funds also influences the type of financing that should be used. Seasonality of the activity should be reflected in the short-term need for capital. And then the third one is the impact of the financial condition and performance of the firm on choosing the type of financing to be used. It's very, very important. These three factors are very essential factors that must be factored in when relating to external financing. So that's where we end this particular discussion on the introduction to agribusiness investment decision. Subsequent slides will continue from where we stopped. If you have any question, please don't forget to um, drop your question on the link, or when we have physical meeting, you can also bring up your questions or use other channels that are available for communication. Thank you.